Okay, hey everybody. Thank you for joining us. We are glad to host you here from our Tel Aviv office for those that are joining us globally. My name is Omri Ben David. I'm a partner at Viola Ventures, and co-hosting this webinar today with me is Tomer Michaeli, who is a general partner at Viola FinTech. We think, as you heard, the gist of this is to give you a flavor of the vibrant Israeli FinTech ecosystem, talk a little bit about what happened in 2022, our investment thesis going into 2023. And because of the audience here of mainly corporates and organizations, we wanted to give also a glimpse of some ideas of innovation into FinTech ecosystem. So maybe it will resonate with you in terms of where your organization can innovate and what other things you can do that are, whether you are a financial institution or not. So before we get started, for those that don't know us, the Viola Group is the largest tech-focused investment firm in Israel. We managed more than $4.5 billion. We've been founded about 23 years ago in the year 2000, and we operate across 4 different families of funds. I'm a partner at Viola Ventures. Tomer here is with Viola FinTech, and we also have a growth arm and a credit arm. What we are very proud of is that over the years, we invested in more than 200 companies. And if you sort of look at Israel as an ecosystem and you believe the number of 60 to 70 unicorns, about 14 of them, and you can see their logos at the bottom, were grown and invested with the Viola Group. And we are very proud of this disproportional share of Israel outliers, because at the end of the day, we are in the business of helping companies when they're still young grow and become category leaders. We're also very, very keen in the FinTech ecosystem. We have made about 50 investments across the different funds in the FinTech landscape. And you can see diversified between areas like vertical FinTech and lending, banking services, RegTech, investment management, payments, and insurance. And when we speak about the different opportunities, you'll see a few of our highlighted portfolio companies that are obviously on this slide. So today, as I've mentioned, I will take you through 2022, looking back on the markets and what is happening in the FinTech world. Tomer will then take it over to talk about 2023 and our investment thesis there. And then at the end, we'll do a spotlight on a few Israeli FinTech startups that will tag team between the two of us. If you have any questions, there is a Q&A tab at the bottom of your screens. Please feel free to write your questions there, and we'll try to address them at the end. And of course, we'll have our email addresses also as a last slide, and please feel free to reach out with your thoughts, feedback, or questions after this webinar is taking place. So without further ado, let's start talking about 2022. Obviously, we're all experiencing this environment of new normal, this environment of fears of recession, of a downturn, etc. And really, it's a mix of things that happened in the last year that brought us into this situation after pretty much a high tide since 2008, which was the last crisis. So things like global geopolitical tension, crunch on supply chains, energy prices going up. And when we say this, it's across the world. It could be Russia, Ukraine, it could be China, it could be other areas that, of course, bring uncertainty into the markets. Then comes decades high inflation rates, uncertain macro environments, fiscal and monetary policies trying to adjust with increasing interest rates, of course, to get inflation in check. And then higher employment, we put in a question mark because we haven't seen that yet, but typically you'll see unemployment go up for interest rates to start and go down. So ultimately, money is becoming more expensive, and that therefore equity markets are crashing. We see multiples going down very dramatically, and that trickles down from public to private. It starts with growth, and then it goes all the way down to early stage. And I'll show this in a few charts in a minute. We also see some of the COVID trends actually reversing. E-commerce obviously exploded in the COVID, in the heights of the COVID pandemic. It's now retracting a little bit, and we see also others, things like hybrid work environment, right? There was this big trend of working from home, then it became hybrid, and now you see some trends of people going back to the office, etc. So a lot of those trends that the pendulum is almost swinging back to a new normal. And of course, with all of that and the economic and unemployment potentially going up, etc., or gas prices going up, you see lower disposable income, higher credit card balances, potentially higher defaults, lower business spending, and they're obviously a vicious circle of what we all experience right now in the world. So going back to, or starting from, I would say the global markets, obviously we've experienced a bear public market, but FinTech was also significantly impacted. So here you see S&P 500 went down about 20% in the year, NASDAQ 34%, and the financial technology, KFTX, about 32%. So pretty close to what happened with the NASDAQ. I'll show the Israeli market a little bit later as well. But if you kind of double click on FinTech, we actually see FinTech revenue multiples contracting pretty substantially across the board. So what you see here is a slide that basically shows year-end 19 revenue multiple, year-end 2020, the November 21 peak, and then today as of November of 2022, and it's sorted in descending order, meaning the highest multiples today are on the top left and the lowest are on the bottom right. And you can see some areas like corporate payments went down from 23x in the peak to about 5.6x in November of 2022. And you go down sort of those lines, and you can see that the multiples have contracted very, very meaningfully, all the way down to InsurTech, which was at 9.6x revenue multiple, and in November 22 at 0.3x. So really a dramatic fall. And of course, we felt that across the board in the FinTech industry. Another thing that came out as sort of the result of this year, if you look at just 2022, which is the most right three columns, IPO markets have dried out. That's true globally, but of course also for FinTech. FinTech private investments, which you can see on the light blue, are declining and continue to decline. Q4 2022 numbers are not out yet, but the trend is alarming, right? You actually see private markets drying out when it comes to investments in general, and also FinTech in particular. And what you expect to see is for M&A, which is the dark blue, to start and take larger piece of the pie. Part of it is because distressed assets getting sold. The other part is because valuations have come down, and the third part is organizations like yourself have very strong balance sheets that they can leverage in terms of acquisitions. So typically in this environment, you'd actually see M&A on the increase. And it's not just the US or an Israel phenomena. Here you can see it by regions. So North America, Europe, Asia, and the rest of the world. If you just look at the 2022 year to date, you'll see a pretty significant drop, going slightly above the 2018 to 2020 average, but really in a declining trend that, frankly, we don't know when is that declining trend will stop. I think that will come where more certainty comes into the market, but also when the public markets will start to increase, which are typically the leading indicator, that will start trickling down into private markets, but we don't expect that before the second half of 2023. And in terms of areas, when you look at it globally, banking, crypto, and financial management led the way, both in a number of deals, but also in the financing volumes that you can see on the right-hand side. I'll talk about the Israeli ecosystem in a few slides. So that's pretty much an overview of what we saw in the global markets. And now we want to double click on the Israeli ecosystem. So first, we showed you earlier that the NASDAQ went down by 34%. We have established an index called the ITI, basically Viola's Israeli Tech Index. It has 31 Israeli public companies in it, and that index went down by 47%. So actually went down more than the NASDAQ. Part of it is the Israeli ecosystem, not just FinTech, but went in 2021 had 25 IPOs on the NASDAQ and New York Stock Exchange. So not in Israel and not anywhere else in the world. And we believe that was part of the hype of 2021 when companies went out prematurely in the public debut. And that's premature is part of, could be their growth, their nominal revenues, but it could also be the leadership team that was not really prepared for prime time. We expect this gap to close with time to come, but that's definitely something that we wanted to highlight and show today. And when you look at some of the recent IPOs in the public markets of Israeli fintechs, we saw across those about 70% drop. So Hippo and Lemonade are success stories in InsurTech came out of Israel, but look at the drop since their public debut from 90% and 77% respectively. And Payoneer, full disclosure, one of Viola Ventures portfolio company, has also got price was down by about 45% from the June 21 to December of 2022. So really something that we see again across the board globally, and then in Israel, and even more so, I would say, in some of the Israeli companies. In terms of private fintech investments, you can see that trend follows the global trend. So in 2022, latest numbers are about 1.6 billion of fintech investments. That's much lower than 2021. That was 6.1 billion. Also about 100 less or fewer deals, from 174 deals to about 78 deals. But even if you look back at 2020 and 2019, we are pretty much at those levels. So 1.6 billion is where 2019 was, or slightly below it. And we've actually seen, and I'll talk about it in a second, we've seen the drop in fintech in Israel investments is actually steeper than in some of the other verticals. So as I've mentioned, 2021, there was 6.1 billion of private capital invested in Israeli-related fintech companies. Okay, that's that number, going down to 1.6 billion in 2022. And you can also see the shift in terms of areas. So payments, software, and InsurTech are way down. There were a big chunk, as you can see on the left, the largest three areas in 2021. And then trading and banking shows some resiliency, but even that's driven by one-off deals that happen in the space and not really showing any significant trend. Again, in the year of a limbo and uncertainty that 2022 was. And if you double click on that, you can see that most of the decline, if you look on the right-hand side, that 6.1 billion was comprised of $4 billion of private capital investments in what we call mega rounds. That's the light blue. These are rounds that are raising more than $100 million. And you can see in 2022, there was only 210 million. Again, it's all fintech, but the drop from 4 billion to 210 million, I think tells pretty much the story of 2022, where you see those mega rounds pretty much vanishing, while early stage is obviously lower, but still at a relatively healthy place, meaning there was $535 million of new capital coming into the early stage, so seed and A rounds. That's pretty similar to what we had in 2019 and 2020. That means you still have innovation and influx of companies coming into the system, but you see way fewer companies that are raising mega rounds at sometimes too high of valuations. And I alluded to this earlier, but fintech generally was a constant or a consistent 20% of the Israeli market, 20% of the deal flow, 20% of the unicorns, 20% of the capital that invest, and that was the magic number for fintech. But we saw in 2022, like I said earlier, we actually saw a further decrease, in fintech to about 10%, right? Which also tells you that the market is shifting into more recession-proof sectors like cyber and IT and DevOps, as you can see on the right-hand side. So if we think about deal sizes, we don't have perfect valuation visibility, but typically there is a very good correlation between a deal size and the valuation. If you think about every round is basically a dilution between 15 and 25%, call it. We've actually seen the early stage, which is at the top left in green here. We've actually seen an increase on the median deal size, which again says that on the early stage, where it's very competitive and you can still pay a lower valuation, and maybe you're less vulnerable to that in terms of, if the company succeeds, you can pay 20 pre or 25 pre or 15 pre, you're still going to make a nice return. We've actually seen that the median deal size has increased, albeit with fewer deals. But on the mega rounds, you can see the drop, and in the growth stage, you can see the flatness, which tells us that the valuations are coming down, and we expect to see that trend continues into 2023. Because again, Q4, if you look at 2022 as a year, it looks like a year where, again, 1.6 billion was invested on a sort of a yearly basis. But if you look at quarter by quarter, we definitely see a declining trend, and we expect Q1 to be no different in that trend until hopefully towards the back end of 2023, we'll start to see an increase again. And again, for a country that was minting unicorns on a regular basis, and also fintech unicorns, there were only 2 mega rounds in Israel in 2022. Both of them were early in the year, so none of them in the second half of 2022. Again, coming back to what I said earlier, and there was Unit and Capitalist that you can see here on the bottom right. And last but not least, I think M&A will continue to grow. I've mentioned the reasons at the beginning of this webinar. Again, with softness in the market, there is appetite to continue and acquire, whether it's to acquire tech or acquire people, or even acquire businesses where you can benefit from lower valuation, and basically be in a place where you can integrate those businesses into your own business and be well positioned to sort of explode out when the markets are better. So with that, I'm going to turn over to Tomer.
Thanks, Omri. Hi, everyone. So I think that Omri gave a really good overview of what's happening in global markets, and especially with a focus on global and Israeli fintech, and it feels like, very gloomy, right? But however, we believe that, in crisis times and actually the best companies are being created. And for us as an early stage investors, we actually see a ton of opportunities globally and also especially in Israeli fintech, and really wanted to share with you guys, some of the opportunities and some of the silver lining that we're seeing in fintech and in the investment opportunities. And we believe that, entrepreneurs are very resilient, they are very adaptive, and they will definitely face new realities in 2023. But we believe that, again, that will grow more resilient and new kind of companies that, are more immune to the challenges that came during 2022, like high interest rates and so on. But, what are the challenges that, new startups an existing startup will face, going into 2023? So first of all is, it's just the higher cost of capital. Many of the business models that we learned, and we saw during the past several years, basically relied on very cheap cash, zero cost of capital. And of course, that is not the case. So that means that all these business models are basically are jeopardized. Some examples is, of course, consumer credits, which will suffer not only from higher cost of capital, but also, as Omri said, higher unemployment means, people don't have money to repay loans, which means higher defaults, lower disposable income, and again, higher unemployment rate. On the business credit, it's the same story, right? But not on the consumer, but on the business side. Again, businesses, because lower disposable income, people spend less, at businesses. That means that they have lower revenues. That means that they have less money to repay loans, and it means higher defaults, and so on. And because of that lower revenues, it means they can spend less with their clients and so on, which again Omri mentioned as a vicious circle. And in general, we've seen it all around. When there are lower revenues, businesses are cutting their expenses. The first thing that's getting cut off is growth and marketing costs, and that means that every business will see lower growth, and especially on the B2B side. And in general, we see that businesses will shift their focus, from growth into profitability, and which manifests itself many times in the margins, because if you don't have healthy margins, it's very, very high. It's very, very hard to create a profitable business. However, we see huge opportunity in fintech, and I think that this slide, is just two graphs, just shows you the immense opportunity in fintech. On the left-hand side, we see basically the pool of gross profits within different industries. And we see that the pool of gross profits in financial services is higher than any other industry in the world, over $6.5 trillion of gross profits, is up for grabs by innovation and by disruption. On the right-hand side, we see, from that, from the market cap of fintech, both traditional as well as new existing financial services. You see the penetration rate of fintech over the past few years, and we can see that at the peak of fintech in the first quarter of last year, fintech penetrated only to 5% of the market cap of all the financial services, and now it's even down to 2%. That means there's a 50x room to grow for fintech, and that is a huge opportunity, and that is why here in Viola we are highly excited about the opportunity in fintech. But how will the 2022 challenges will translate themselves, into the 2023 opportunities? So first of all, we believe that the pure B2C models that are suffering and will suffer due to shrinking marketing budgets and problematic LTV to CAC. We see that translated into an opportunity to take B2C businesses into or B2C go-to-markets into B2B2C models. That means that areas like embedded fintech will enjoy a renaissance, because that basically takes a B2C product and makes it a B2B2C product, and that means that selling through corporations and through banks, through what we call fintegration, which is a combination of fintech and integration, will see a renaissance, because it lowers the CAC, it enjoys the high trust that corporations and banks enjoy, but it does bring all the goodies of fintech innovation to the end customer, but in a much more cost-effective way, which solves the fact that you don't have marketing budgets as a B2C companies. Pure spread business models, again, the businesses that really enjoyed very low cost of capital in the zero interest rate environment, which disappeared in the past few quarters. Again, these businesses are going to struggle. We see that especially true in businesses like buy now, pay later, which enjoyed a huge growth in the past few years. And again, we believe that these kind of businesses will have to transform themselves, and we see an opportunity with companies that are actually being able to dynamically price and time, the right product in the right time, in the right price, as a way to protect spread. Because if you have, a very short, cycle and a very quick algorithm, to price correctly a loan, for instance, that means that even in a volatile environment where default rates and cost of capital are changing rapidly, you can still maintain your spread and create a profitable business. So there's a real opportunity there for very dynamic businesses. SMBs. Every time there's a crisis, SMBs are getting hurt the first. Banks are tightening their credit criteria. They don't provide credit to SMBs. They run out, and that means that they are running out of cash, and so on. And this is exactly at the time where as in every crisis, there's a huge renaissance for new small businesses. People are getting fired, so they're opening their small businesses. And in general, every time there's a crisis, there's a huge birth rate of SMBs that are looking for fintech solution. So as a result, we believe that there's going to be a new wave of SMB-focused fintechs that will take advantage of all these new businesses and new business models of SMBs, like influencers and gig economy and so on. And we're excited to see already businesses fintechs are serving these verticals. In terms of what are the main trends and investment thesis that we Viola see in the next in 2023 and maybe also in the next few years to come. So first of all, vertical fintech. So we believe that fintech already started what we call eating the world. We believe in fintech is eating the world, and it started to disrupt already industries like education, healthcare, real estate, music, and so on. And we're actually going to give some examples later of companies that are disrupting these areas. So we believe that going forward, this trend will only strengthen itself. We'll see more and more industries providing a tightly tailored fintech solution for these industries. Vertical fintech solutions that will help these businesses create new revenue streams. It will increase their margins and will increase liquidity and inclusion in these markets. We are highly bullish on vertical fintech. The second area that we are highly bullish on is embedded fintech, embedded finance. That is, whereas we saw in 2021 and 2022, many, API-driven embedded finance companies that are serving mostly fintechs. We believe that they will suffer from, client mortality. Many fintechs that will go bust because of this environment, as well as higher CAC, sorry. But we believe that, that will create actually a shift towards, large brands, more established brands, more trusted brands in industries like, retail, telecom, automotive, and so on, launching neobanks, where customers will feel and consumers will feel more comfortable with getting financial services. And again, we talked earlier about the B2B2C model. This is a great example of where B2B2C model is really, we believe, the way to go. The third area that we are highly bullish on is InsurTech 2.0. So what, many of the companies that Omri showed earlier that struggling are the first generation of InsurTechs. We believe are mostly took traditional insurance products and basically made them digital. But we believe that, they had very hard time competing with the traditional insurers. And we believe that actually the real potential for innovation is actually where either you take new data sources and create new insurance products that did not exist before. We call it blue oceans. And also in general, we believe that in the InsurTech space, we put much more, or the businesses that put much more emphasis on unit economics, loss ratios, and not growth, will be the winners, as well as, again, those that will use more effective and scalable go-to-market like B2B2C. Those are the ones that will prevail. Blockchain and crypto, these are definitely areas that got hit very badly during the past few quarters. But we believe that the fall from grace is temporary, which means that the industry will go into what we call the build mode, basically going back to basics, going back to build the infrastructure to fix all the problems that we saw over the past few quarters in area like usability, security, and regulatory oversight. And we believe that many companies will pivot towards, again, more infrastructure play, more essential solutions, and will change the business model to reflect, new realities. And basically, many of the companies will not survive, and those that will survive will be, survival of the fittest, those that change their business model in the most cost-effective way. Another darling of Viola is, what we call AI and RPA innovation. When companies and financial institutions are going into, cost reduction mode and putting much more focused on profitability, the technologies that provide, cost saving and profitability are the darling of corporates and financial institutions. So we believe there will be a lot of openness within within corporation, especially around finance department, CFO office, regulatory regulatory compliance, and so on, in openness to adopt and cost saving technologies based on AI and RPA. And we believe that companies in that space will enjoy a lot of love from customers and investors. And finally, ESG and carbon economy. We believe that over the past few years there is an increasing awareness within employers, employees, and corporations regarding their carbon footprint, governance, and social responsibility. As a result, we believe that there will be a wave of companies that will provide ways to monitor and to get into more transparency for employees, for employers, for shareholders regarding the ESG practices of corporations. And as a result, we believe we'll enjoy a lot of love from clients. And now I'm going to hand it over back to Omri to talk about some of the most interesting companies in Israel around some of the themes that we've mentioned earlier.
Perfect. Thank you, Tomer. We have a pretty broad audience here, obviously, for corporations and organizations that I mentioned earlier. So we're going to try and give you a glimpse of kind of one slide per company and what they do to get a sense of the innovation that we see in FinTech in our portfolio and beyond. And of course, at the end, feel free to reach out if any of those piqued your interest and you'd like to learn more. It's going to be quick and hopefully something that excites you the way it excites us. So we're going to start. The first one is a company called Personetics. Personetics is essentially working with banks. It could be a very large bank, it could be a regional bank, it could be another type of financial institution. And they're using data to basically personalize the services and the customer engagement with your audiences. So if you're a bank and you implement the Personetics software on top, your customers will now benefit from push notifications or from actions that will actually help them be more savvy on their financials. So for example, it could be a roundup of your expenses into savings. It could be avoiding getting into an overdraft. It could be a BI system that shows you how much you've spent. And by the way, you as consumers may use the Personetics system already without knowing so, because it's white labeled into many of the world's leading financial institutions. And you can see some examples at the bottom here, like US Bank and RBC and Santander, etc. And it's being done globally. So essentially a tech platform that enables you as a financial institution to engage customers, to empower them, and to obviously expand and grow your customer relationships. Moving on to a company called Sorbet. Very interesting play in what Tomer described as vertical FinTech. Sorbet essentially sells to both HR or wellness teams, but also the office of the CFO. What they do is they provide a platform that encourages employees, your employees, to take some time off. They can even help them find this type of time off on a marketplace of activities. And more importantly, for the employees, they can monetize and actually get a prepaid card with some of the vacation days. So for the HR or wellness teams, that helps motivate employees. It helps them with encouraging the employees to actually take some time off. It helps them to not only choose their activities, but actually also to say, hey, you know what, I'm going to take these 2 days activity, but also I'm going to take a prepaid card of $1,000 for spending. So from an employee or HR wellness standpoint, it's a big benefit. And it's also a benefit for the office of the CFO, because every CFO knows that their PTOs, what they basically have on their balance sheet as a liability, encouraging the employees to take those times off and monetizing them helps those liabilities to be reduced. And that's part of the value proposition for Sorbet. Again, looking at a vertical that is very, very large in its size in terms of the dollars that are on those liabilities of the balance sheets of US companies, and putting in a FinTech solution to help reduce the problem, quote unquote, on both ends, on the HR and on the CFO / balance sheet. The third one is a company called Llama that ties to the thesis that Tomer describes around SMBs. I'm sure you know this, but 80% of SMBs that apply to loans actually get declined. What Llama do, they work with both financial institutions, could be smaller banks, regional banks, big banks, but also with vertical SaaS providers and others, and enable them to first digital onboard the customer applications. So instead of having that as a paper case, they're helping them with putting this in their repository online in terms of their case and the application. Then they help with underwriting and risk scoring using first-party data of the bank or the financial institution, but also third-party data. And then the nice trick here is that they're launching an exchange, which basically says, hey, I'm a financial institution. Instead of declining my 80% of my customers, I will find another pocket that is interested in those types of loans in terms of risk profile. So I'm a regional bank, someone applies to me, digital onboarding, the underwriting is taken care of. This is not a loan that sits within my credit box, so I can put that on an exchange, still retain the customer, but also help them with a loan from another provider, all done with AI and pretty sophisticated underwriting mechanism. So that's the third example we have today. The fourth one, for the brave audience, we invested in a company called Nylos. We believe that it's a company in the Web3 infrastructure space. We believe big revolutions or big things don't happen overnight. So basically what Nylos does is they bridge Web 2 into Web 3. So you can be a totally Web 2 organization, but you are minting an NFT, or you would like to get some on-chain revenue, or you want to deal even with this world, but you don't want to break any regulatory framework, and you want to have an audited trail of what's happening. And guess what? Most of your expenses are in fiat, right? In US dollars or whatever currency you're using, and you need someone to help you off-ramp from any type of a cryptocurrency, takes it to an exchange or like an FX in our older world, and bring it into your fiat account all in a secure and compliant way. That's exactly what Nylos does. It helps Web 2 and Web 3 organizations to deal with cryptocurrencies in a way that is compliant and secure, and to touch this space without incurring too much of the risk. Tomer?
Yeah. So the fifth company is a company in an area that we've mentioned earlier as the one that excites us greatly, which is banking as a service. Basically, Alvier provides the ability for any consumer-focused brand, again, be it a telco, a retailer, an airline, etc., to provide basically any financial services like payment cards, loans, remittances, even crypto, and in a fully compliant and in a seamless way. Again, the idea here is that we believe that consumers are growing to expect their trusted brands to consume, to offer them financial services, and And again, we believe that this will become the trend de facto. However, launching a financial service is hard, both from cost as well as from regulatory perspective. And basically, Alvier provides that in a way that is completely seamless for the corporate. They already are working with top-tier clients, mostly in Latin America. Again, large telcos, retailers, and so on. And again, we believe that this will be the way that large corporations will offer their end clients in a way to engage, but of course also as a way to increase their revenues, their margins, and so on.
Yeah. Just to mention, the picture on the right is a brand called OmniMoney. It's powered by Alvier, but it's basically Boost Mobile neobank. So essentially, instead of chasing the consumers like some of the neobanks are doing, OmniMoney has its own audience, its own consumer base, and they're launching their own neobank powered and all regulated by the Alvier platform as sort of one public example that we can speak to.
Right. And finally, Plank. Plank is basically an insights platform for commercial carriers, insurance carriers, basically based on AI. The use case here is pretty straightforward. Today, if you are a commercial carrier, underwriting is extremely costly, extremely slow, and extremely inaccurate. And basically, with deploying Plank's SaaS platform, it enables you not only to reduce, dramatically your underwriting cost of commercial insurance, especially on the SMB side, but also whenever you are renewing, it's basically done completely automatically. If there's significant changes in the risk profile of the client. But I think even more interestingly is the fact that Planck finds what we call new risk factors, basically new areas or new factors that you should incorporate into your questionnaires, your pricing, and so on, that did not exist earlier in the carriers questionnaires or risk factors. And this is actually where the real magic happens. It is completely reliant on unstructured data, on first, second, and third party data, and again already being deployed with several top-tier carriers in US, Europe, and APAC.
All right, I'm going to check our time. So we're going to go another 4 minutes. So finished 10 minutes before the hour. There are no questions. So maybe 3 more companies quickly, and then we'll wrap it up. So the next one is a company called Fay. Fay is the first US only for now consumer travel insurance company. You can check them out on the website withfay.com. It's basically you getting underwritten on all your travels, whether domestic or international, for your luggage, for your health, and for trip delays. And if, for example, you miss a flight or your luggage got lost, you automatically get $200, for example, into your card that is already pre-charged in the app. So a very convenient and effective way to travel the world with a consumer travel insurance policy in your pocket. So that's another example of the InsurTech 2.0 that Tomer discussed, is basically getting an unpenetrated or underpenetrated vertical or area where you can really disrupt it with a new brand. You're going to think to yourself, okay, but when I go on Booking and Expedia, I get some travel insurance. The problem with that travel insurance, these are blank policies that leverage zero data, probably more expensive, and also typically don't cover your health. And of course, good luck with finding a claim. Where here, it's really automated and exciting as an experience. Lambda is another app you can check out. is a company that helps any individual, any retail investor to own a fraction of a single family or a multifamily home with as little as $5. So basically, you go on the app, you choose your home, you buy, let's say, 3 fractions of the house for $15 or $20, and then you get the full sense of ownership. You benefit from mortgage economics, but you also get the dividends or the rents that come every month. And so on. It's really about access and democratization of real estate investment without needing the $50,000 or $60,000, the $100,000 of a down payment in real estate. Another very exciting portfolio company of ours that sits more in the asset management type of investment thesis. And last but not least, Viably also touches on the SMB landscape. Viably is an all-in-one super app for SMB, enables you to understand your ins and outs of your cash flows, enables you to take credit for working capital, and enables to really also tie your expenses into your income. Right now, the focus is on e-commerce merchants. Also live and available if you want to check them out at runviably.com. So this is really what we showed you is a glimpse of what's happening in the Israeli ecosystem. I mean, you can look at the map here and understand the breadth and depth of this ecosystem. What's circled or has a box around it are our portfolio companies, but of course we are around if we can be helpful with any introductions or help understanding the ecosystem or the type of solutions that exist here. So really feel free to reach out to us either via Healy that you've met, our VP of BizDev for the group, but also directly to us through the emails that are right now on the screen. So with that, we, Tomer and I, on behalf of the entire Viola group, would like to really thank you for attending. And please do not hesitate to reach out to either of us if you have any questions, follow-ups, feedback, whatever that may be. Thank you very much.
Thank you very much.